joining us now.
All right, so I'm sure that we're going to have a swell time today. We're going to have a massive time today. I know you're ready. I'm sure that the admin eCooperative will make Michael host so that we can get started. The floor is yours, sir. Welcome.
Thank you very much. All right. I'd like to, as my culture is, I'm happy to have Angela Odumusu, Antonia Odili, Charles Mazie, Dr. George Ingrid, David, Ife, Ginger, Livinus, McPrince, Gozi, another Ngozi, Nonso, Ejele, Oge, Olukemi, Kemi, Ronke, Shubamu, Sanjo, Shalom, Trozi, Usoro Moses, Sijowade. Thank you very much, everybody, for joining. So tonight we'll be talking about financial market. I think I like talking about the financial market rather than just talk about Forex, because Forex is just a sub section of the entire financial market. Forex is very limited. Okay, so I'm going to be sharing my slide, but I'm not going to dwell too much on the slide. I just want to focus on the theme of this discussion tonight. I call it discussion. And that will be debunking the myths and misconceptions about Forex. That's what I want to really talk about. And then in the course of my talking, we'll get to understand why that's why we need to make some points very clear. So I will dwell much on bringing clarity to the subject of Forex and why so many people have failed over the years and why things about Forex seems to be fraudulent in quotes. Okay, so thank you very much. I will just start by, I know that some of us, we are aware about Forex. We've maybe read about it, we've heard about it. Sometimes we've had some nasty experiences with the subject. Sometimes we try to invest with a Forex firm and all of that. And why didn't I get my money and all of that? So I will just talk about Forex generally, but there are a few things I want to focus on. Okay. So I don't know if I am permitted to share now. Okay. Hello, Dr. George. I don't know if I can share my screen from what I'm seeing. Oh, I'm not permitted to share my screen, please.
Admin, please, admin, eCooperative admin, please help him share his screen.
Okay. No, thank you very much. I think I've been given the privilege, but I want to, okay, hold on. Allowed to share screen. There are two of me. I'm using my laptop and my phone to connect. I need my laptop privilege. I want the one with the laptop to be given access or privilege to share screen. Okay. I still cannot. Okay, I think that makes sense. All right, thank you. Please, where are we? Yeah. From the beginning. Okay. Please, how many persons can see my screen? I want to be sure that. Okay, all right. Okay, so I didn't really have, all right, thank you very much. Okay, so please, I want us to pay a very crucial attention. I'm going to be as real as I can, and I'm going to be very straight to the point, okay? Thank you very much. I know you can see my screen now, thank you. Okay, so we're looking at the financial market. That's what I feel we need to understand. The Forex is just a subset of the financial market, because when we're talking about foreign exchange, that is Forex, were limited. We're just talking about the interplay of currencies, purely currencies, okay? But I really don't want to be limited to Forex because I'm not just a Forex trader, I'm a financial market trader. I trade a lot of things. But I would just want to talk about Forex, and then I will talk about the financial market and how we can benefit extensively from the financial market. Like what you see on my screen, I'm just going to read to us. I know that we can get all of this information on the internet, but why I'm bringing this in is so that I can explain some things to us, so that we get to understand some stuff and why things are the way they are when it comes to the Forex market. So the foreign exchange market, is which is usually known as Forex or FX, is the largest financial market in the world. I'm sure a lot of us were aware of that. Now, the FX market is a global decentralized market. Why it is called decentralized is because it doesn't have a central location. You can stay in any part of the world. The market moves. It's like a moving vehicle. Any part of the world, you can practice your exchange. So it's a decentralized market where the world's currencies change hands, exchange rates change by the second, so the market is constantly in influx. It's actually changing. Only a tiny percentage of currency transactions happens in the real economy, all right, involving international trade and tourism, like the airport. Okay, let me explain this concept. The real Forex trading happens online. That is OTC, over-the-counter transaction, OTC, over-the-counter. Why? Because one, it is a decentralized system, and the people playing are not supposed to be physically seen, all right? So the very, few percentage of people who practice the physical exchange, are very few. The percentage is very small. Just like when you go to exchange dollar with the common or bookie person or in the black market, and that's another form of foreign exchange. Or maybe you're traveling to another country, you need to exchange your own domestic currency to that country's currency. That's the form of foreign exchange. So the people who practice that are very few. That's what it means, that they will have a tiny percentage of people who do that in the real economy. The rest of the percentage, about 90%, practice over the counter. Anywhere you stay in the part of the world, you can trade and be part of the foreign exchange market. Okay, so currency traders, also known as currency speculators, buy currencies hoping that they will be able to sell them at a higher price in the future. A lot of people don't really understand the concept behind foreign exchange. People always say it's the buying of one currency in exchange for another currency. Well, if you want to say literally, that is what it means. But when it comes to over the counter, truly, you are not buying nothing. Quote me anyway, you are truly not buying or selling nothing. That's the real truth. It's just that the way we see it online, the way we come to understand it makes people accept it that way. But when you are in the Forex market, you are truly not buying nothing. And maybe as we make progress, I'm going to explain. Really, what we are all currency speculators. Majority of people trading OTC, over the counter, are currency speculators or financial market speculators. You are not buying nothing. And let me explain it at this point. For example, I know that we had our own training on cryptocurrency. If I tell you to show me one pieces of Bitcoin, you will discover that you don't have one. All you have are just wired, signals online. Nobody can show me one Bitcoin. It's not tangible. It's not physical. Okay. So when you say you are buying Bitcoin, the question is, if we understand it literally, you don't have Bitcoin. You don't have nothing to show. Everything is just done over the counter. So when you say you are buying dollar in exchange for pounds, like I said, the people who do that in real practice are very few. That's the people that do the literal foreign exchange. But the majority of people who are in the real forex exchange are not exchanging dollar for naira. That is what we are meant to, to feel like. But the truth is that we are only speculating. And let me explain the aspect of currency speculating. It's simple that, okay, you are thinking that maybe in the couple of days, let's use our current example, maybe Nigeria now, there is a market analysis with the US dollars and Naira that in the coming months, Naira is going to become a 1,000 Naira against dollar. So that's speculation. You're speculating. But when something backs up that speculation, it becomes a technical speculation. So that is the only thing that will make you want to buy, more dollars so that you can exchange later on. What you're just doing is foreign exchange. Now, when the dollar to Naira becomes 1,000 to 1,000 Naira to $1, you now sell it out, making more of Naira at that time. What you just did was foreign exchange. But this time around, you're not doing it physically, although you can do that physically, but you can also do that online. So that's what we're talking about when we mean speculating. You're speculating the differences in prices. That's what majority of traders do. Nobody is literally buying dollar in exchange for pounds or whatever. So I want you to understand that at this point. So currency traders, also known as currency speculators, which should be the real thing, buy currencies hoping that they will be able to sell them at a higher price in the future. That's what it is. So you're not necessarily buying dollar as it is perceived to be in exchange for pounds or whatever. Now, like I said, the Forex market is a very wide and a very large market, and it runs daily at about 6.6 trillion turnover in volume, compared to 22.4 billion we have with the New York Stock Exchange. Now, it's one market that the space is large enough for everybody to participate. However, how is the trading cycle like? Okay. Apart from its size, the market also really closes. It opens virtually around the clock. The market opens 24 hours a day and 5 days a week, only closing down during the weekend. Unlike the stock or bond market, the Forex market does not close at the end of each business day. So instead, trading just shifts to different financial centers around the world. Now, the trading cycle is like this. Every day, the market begins in Auckland, Wellington. That is, and then moves to Sydney in Australia, and then Singapore, Hong Kong, Tokyo, Frankfurt, like that till New York, and then starts all over again. Now, let me explain the concept behind this to a layperson. This different time where market moves from one country and from one city to another is just like what we call the banking time. If you are a Nigerian, you understand that the bank opens by 8 o'clock officially and will close by maybe 3 or 4, all right? And then it continues the next day. So when we say the market opens 24 hours a day, what it means is that the market opens in Auckland, Wellington. Normally we say in Sydney, the market begins in Sydney because we have 4 trading sessions. We are looking at currency. We have the Australian session, we have the Japanese session, which is the Asian session, we have the London session, and then we have the New York session. So when we put the 4 sessions into play, what it means in simple explanation means that those are the time their banks are in operation. Okay, so that's what it means. So the trading cycle in currency simply means the active time banks are on, because you cannot carry out a very large transaction off banking period. You get what I'm saying? So that's what it means. So that's how the thing plays when it comes to the trading cycle. So apart from weekends here in Nigeria, the Forex market is always active. Now, the question will be, what do we trade? I don't know if you can see my screen. What do we trade? What are we trading? The simple answer is money, specifically currencies. Remember that there are a lot of things we trade. We trade crypto, we trade metals, we trade a lot of stuff. We trade bonds, we trade indices and all of that. But when it comes to currencies, or when it comes to Forex, foreign exchange, we're trading currencies, which means we're trading money. Because you're not buying anything physical, Forex trading can be confusing. So we'll use a simple but imperfect analogy to explain. Now, listen, you're thinking of buying a currency as buying a share in a particular country. So I want to explain how this thing works. The price of the currency is usually a direct reflection of the market's opinion on the current and future health of its respective economy. For example, let us use Nigeria as a case study. Nigeria's Naira is really falling apart, and that is because our economy generally is poor, is bad. Our exports power is very poor. We're not really exporting anything tangible. foreign countries are not buying, so our exchange value is also very worthless right now. And that's why dollar is really dealing with naira a big blow. And so in forex trading, when you buy, say the Japanese yen, JPY, you are basically buying a share, in quotes, in the Japanese economy, because you feel that the Japanese economy is doing well and will get better as time goes. So once you sell those shares, in quotes now, back to the market, hopefully you will end up with a big profit. So let me make it more simple. If you have a projection that Bitcoin is going to get to $70,000, assuming, and we assume that Bitcoin is from a certain country. So it's just like you're buying into the share, or you're buying a share from that country. You're buying Bitcoin with the hope that Bitcoin, when it gets to 70,000, because the economy is already doing well and will do better, then you can sell back. What you just do is trading. So what does that mean? You are speculating. What are you speculating? Changes in price. You see that? So in general, the exchange rate of a currency versus other currency is a reflection of the condition of that country's economy compared to other economies. So we have a lot of stuff to talk about, which I'm going to say as we make progress. Now, but this point is where I am very much, I'm going to be a little bit focused. Now, I would have loved to start by saying, why do people fail? And why is trading such a mirage to a lot of people? Why does it look mystical? Why are people complaining about Forex and all of that? Now, let me just talk about this and then I'll go to that. Basically, there are two groups of people that trade the financial markets. Please pay attention. There are two groups of people that trade the financial market. The first set of people are called the smart or the institutional traders. The second guys are the dumb or the retail traders. I belong to the second class. A lot of us who will start trading tomorrow or who are already trading belong to the second class. Now, the institutional traders are made up of these six, class of, or this six group of people or class of people: the commercial banks, the mutual funds, the hedge funds, the insurance companies, the pension funds, the endowment funds. Now, let me explain. Why are they called institutional traders? Because institutional traders are those guys with high volume of money. They have so much money that their money can move price. Their own money can move price. Okay? So there's a lot of money with these people. They have a lot of cash. I'm not talking about little amount of money. I mean crazy amount of money. And what moves prices, what moves markets is volume of money. Now, it takes about, I'm going to talk about it, I'm going to explain to you what lot is, but it takes about 10,000, it takes 10,000 lots to move the market by 1 pip. I'm going to explain what a pip is later on. So it means that you must have $100,000 to move price, let's say from 1 point to 2 points. So think about that. Now, as a retail trader, you don't have that kind of money. You can't even use 10,000 lots in 1 year of trading. So it means that you need 10,000 lots, which is like $100,000 to move the price of an asset, of a commodity, of a currency or whatever by 1 pip. Now, let me explain what a pip is. Pip is the difference between two prices. If market moves from 80 to 20, it has moved 60 pips. I'm going to explain. So that's the difference. So let's look at 1 pip. It means that you need about $100,000 to move the market by 1 pip. So now, when you are trading against this kind of people that have this kind of money, you cannot go against them. Now, let me say some things here for those of us who understand trading a little bit. Now, there's what we call trend. In a more revealed understanding, trend is another word for volume of money. Trend is another word for energy of money. So when they say never go against the trend, in simple terms, it means never go against the institutional traders, right? So you can't become a successful trader if you don't understand this very point. So you need to know. So these are the people who plays in the market. These are the people who have a lot of cash who plays in the market. All right. So like I said, the dumb traders are we with limited funds. We don't have the kind of money that can push the market by 1 pip. So we just follow them. All right. And that's why for those of us who may be aware, there is a form of a technical knowledge, which is very crucial now. We call it the smart money concept. If you understand the smart money concept, you will get to know when the bankers are trading, when they take position in the market and all of that. And that knowledge is very powerful and is very important, okay? So that's that. Let's see. Now, I like to say this as we make progress. Now, oh no, my network is crazy. I don't know if you can still see my screen. Okay, while I'm trying to put back my screen, I don't know. I think I have a power issue. I want to explain the concept of, I'm sorry you can't see my slide now, but let me just explain something. Okay, let's assume you can still see my screen. I don't know. Now we have, when we're talking about Forex, there is something we trade. We trade currencies, right? And we have, please reduce this thing. We have what we call, put it at one. Okay, we have major currencies, we have minor currencies, we have cross currencies, we have exotic currencies and all of that. Now, what we trade basically are currencies of nations against the other ones. For example, we have 8 major currencies that are traded. We have the United States dollars, USD, we have the Canadian dollar, CAD, we have the NZD, New Zealand dollar, we have the JPY, Japanese yen, we have the AUD, Australian dollar, we have the CHF, Switzerland, Swiss francs, we have the GDP, that is the GBP, we have Great British Pound, and then EUR, the euro. Now, we have all of these currencies as major currencies that is traded. Now, we also have the ones we call exotic currencies or minor currencies. Let's start with the minor currencies. Minor currencies are currencies that don't really have value or don't really play a serious role in the global market space. For example, Nigerian naira is a minor currency. We have other currency like Indian rupee. We have other one like South African rand and other ones. Those are minor currencies. Now, why call them major currencies? Because these are currencies that moves the global economy of nations. We are familiar with these currencies because they have very strong exchange power supporting them. Okay. Now, those are major currencies that are traded. Now, but what I'm really here to do is to debunk the myth surrounding Forex, okay? And that's what I'm going to focus on. Because all this information, we can find them on the internet. I can always give us a site. Baby Peeps can provide us with all of this information. But let me say something about Forex. Why are people not successful as Forex traders? Or why are you losing your money in trading? Or why did you invest money in that company and the money got lost? Okay. I want to start this way and then I'll talk about other stuff. There are 3 key things that you need to understand, or you need to deal with, or you need to be aware of, or you need to have control over before you can succeed. The first thing is you must have knowledge. Not just knowledge, but accurate knowledge. You don't just jump into trading because people say it is profitable or you can make a whole lot of money, but you need to have accurate information about it. And that comes through training. You must have knowledge. So why do people fail? Lack of knowledge. People are not willing to learn. They're not willing to get the right kind of information. I'm not saying that it's not okay to go on YouTube, watch videos, maybe follow some kind of information or read books, but sometimes you need some proper training if you're going to succeed. The second aspect is you must learn not to be greedy. So why do you fail or why are you losing money? Because of greed. And I'm going to explain why greed is a major factor. Why do people fail is because they don't even respect, they don't have discipline when they are trading. And I'm saying this because I'm speaking from a lot of experience. I've trained a whole lot of people. And this is one of the problems with a lot of them. Okay, let's assume you have knowledge, but you must be able to deal with greed. And the best way to deal with greed is to use what we call a target-based trading approach. a system where you decide how much you want to make per day or per week, and then you stick to that plan over a period of time. When you don't have a trading plan, you are not a target-based trader, you are not looking at making a certain amount of money per day or per week, and you stay by that, you are going to fail. There are people who say, okay, I want to make $50, or maybe I want to make $20 every day, I want to make even $10, and they do that. Maybe they do that within 2, 3, 4, 5, 10, 20 minutes. And they still feel that they have 23 hours or even 12 more hours to go. What will I be doing with these 12 hours? Can I not make more money again? And then they violate that principle, that discipline. They go in again, and greed is pushing them. You can make more. You have more bills to pay. Don't you think so? And then they begin to push ahead. That's where they make that's where they meet their failure. So, but when you don't have the discipline, that's okay, I'm going to use a target-based approach. My target is to make $5 every day, or maybe $10 every day. When I meet my target, I'm off the market. If you do that consistently, you may not make a whole lot of money, but you're going to be consistently profitable. Because if there is anything that you need to tame, is your greed level. And that's why many people are failing. And they will keep failing until they're able to deal with that. It's a problem that so many traders, including those that have good knowledge, are still dealing with. The third aspect is impatience. And impatience is in 3 phases. 1, you have to be patient with yourself. Now, when you start learning, or you go into the market space or the Forex market space and you want to trade, it's not everything you're going to learn at once. There are so many things you will not learn immediately, or you will have to learn over a period of time. And you will need to learn those things to be able to make profit. All right? You need to have a lot of knowledge. Now, if you are that impatient and you just want to make quick money, it's going to affect your profitability. That's one. So you need to be patient with your learning. What I'm saying so is, if you're in a class of 5, and then you see that another person, or maybe your colleague who started training with you is doing far better, and you feel that what's wrong with me? Oh, come on, nothing is wrong with you. You have to be patient with yourself. You learn it at your pace. And then the second aspect of where you need to exercise patience is you need to be patient with your trainer or your mentor, as the case may be. You don't have to hurry. There are people that I want to make money. There's a lot of bill. I just can't. It said, how long is the class going to take? He said, maybe it's going to take like a month. He said, no, make it in 1 week. Can you just finish everything in 2 weeks? No. If you are patient with the training protocol, you're going to succeed. A lot of people, they just want to make money. They are not interested in the process. And learning, being patient with the training process is another way to succeed. Now, another problem, you have to be patient with the market. When you exercise a lot of impatience, and let me explain this, this is more technical. Don't jump into a market where you have not seen clear signs. The market will always give you opportunity. There are people who feel that they must meet their targets. Even when the market does not provide the opportunity for you to trade, they just feel that I care not about what the market is saying, I just have to meet my target. That is being impatient with the market. So you have to be patient with the market. When I mean the market, you have to be patient with the conditions that will allow you to buy or sell. When those conditions are not clearly, met, don't take any trade. So you see, it has to do a lot with yourself. You can have all the trainings, you can understand all of that, but if you can't overcome greed, overcome that impatient attitude, I'm sorry, you will not be able to succeed. Now, let me say this as we move on. I would have loved to say a lot, but I don't know how to say. There are too many things on my head, but I just want to help us with why a lot of people are not succeeding here. Now, let's use a little example. Right now, the dollar is exchanging at 557 as of this evening. So let's assume that you earn 100,000 naira as a government staff or whatever, and that's your monthly salary, and you learn trading. Or let's assume that you even give an investment company 100,000 and they are promising to give you 20%, which is not very realistic every month. And that is That is because there are a lot of companies, I'm sure some of us who are aware, who came up promising 20% or even 30%, and maybe after 1 or 2 years, they are off the public space because they can't or they couldn't fulfill the promise. It's not because they couldn't fulfill the promise, it's simply because they were being unrealistic. But let us try to be a little bit realistic. So you have 100,000 and you're sending it to an investment company, and they are promising to give you 20% every month. So 100,000, 20% will be about 20,000 naira. So let's assume that you learn how to trade. By learning, you understand what you need to do, when to buy, when to sell, which of course we're going to talk about that aspect tomorrow. And you are just making $5 every day, just $5. If you do $5 for 30 days, that's $150. $150 will give you around 70-something thousand naira today, almost 78,000 today. I mean, $5 every day, just $5. If you do that in 1 month, you make 70-something thousand. So, but the question is, how will you do that? You will need to have a lot of, you need to get trained. But beyond training, you need to deal with greed, because $5 is really small. I mean, $5 is small. What do you, people are making hundreds of thousands of dollars as maybe you've seen on Facebook or as they advertise, and maybe on YouTube, and you're like, what do you mean by $5? But that's the way to go. So if you make $5 and you are not greedy, I want to make $5, I want to make $10 or whatever, you'll be able to succeed over time. That means you'll be able to deal with greed. Because even after you make $5, there will be opportunity to make more. But you say, no, I'm sticking on my $5 plan. If you do that, or maybe $10, depending on your equity, which I will tell us now, you will still succeed. So that's the problem. So instead of giving 100,000, which is not bad, to a company who's promising you 20%, which is still not a realistic return on investment as far as trading is concerned, and then you stay to get 20,000 at the end of the month, if you do it by yourself, it is far better. That does not mean that there are not investment organizations or companies that can trade for you. That's if you don't have time. Like the eCooperative, very soon they're going to launch that part, and you'll get to know. Because of the realistic nature of the approach and the percentage given, these are, platforms where you can entrust your money and be sure that, okay, your money will be safe. Now, let me say a few things. I'm trying to still put up my, okay. Let me say a few things. Now, if you're going to trade, don't allow yourself to be limited to just Forex. There are a lot of financial instruments, financial assets that you can trade. Forex is just one of them. That is the foreign exchange. That has to do with only the currencies. We have crypto, we have commodities, we have synthetic indices now, we have metals and the rest of them. We have CFDs, that is contract for difference, which of course the synthetic falls under. Please, you're going to ask your question shortly. Now, for those of you that are just starting or who does not know anything about Forex, there are 3 important things you need to know. The first one is equity. The second one is lot size. And the third thing is peak. Equity is, yes, I'm coming back. I'm trying to share my screen. I think I'm having network issues. Equity is like capital, the amount of money you need to start with. It's just like every other business. When you want to start a business, you need the capital. You need capital to start the business. So equity is like the capital you need to start with. Okay? And then lot size is the transaction unit. What you need to place a trade, or what you need to buy an asset or a commodity. That's what lot size is. In a layman terms, stop that, okay. The lot size is that trading amount you want to use to either buy or sell. Because a lot of people ask questions like, if I have $100, does it mean I'm going to remove $5 and trade? No, sir. That's not what it means. It means that you're going to use a certain a certain part of that money, but it is quoted in units. That unit does not necessarily have any monetary value. It is the differences in prices accumulated that will result in the amount of money you make or lose. Okay, so you need equity. Equity is like the startup capital. Then you need lots. You need to understand lot sizes. Now there are 4 types of lot sizes. What is wrong with the screen? Put this down. Now you need to understand lot sizes. Lot size means everything. Hold on. Lot size means everything. If you use an aggressive lot size, you're bound to lose money. Your lot size will determine how much you are going to make or you're going to lose. And that's why the use of lot size is very crucial. Okay. So we have 4 types of lot size. We have standard lot size, we have mini lot size, we have micro lot size, we have nano lot size. Now, as far as Forex is concerned, one standard lot is 1 pip. If you use a standard lot and the market moves 1 pip, you have to make $10. Let me explain it. If the price of a certain commodity is at 100 naira, and then you are predicting that the price is going to go to 120, and you buy when it is 100 naira, and the price moves to 120, you have gained 20 pips. If you use one standard lot is $10 by 1 pip. So it will mean $10 times 20. That will be $200. So if you use one standard lot to buy that asset at the price of 100, when it moves from 100 to 120 and you use one standard lot, you would have made $200. Now, if you use 0.1 lot, not one lot now, you would have made $20. So your lot size determines how much you will make or how much you're going to lose. If you use a bigger lot, there are possibilities they're going to make bigger amount of money or big amount of money. And you can also lose based on the lot size you use. So one thing that is critical is the use of lot size. And this is where a lot of people are failing. Aggressive lot size. Lot size that is not subjected to risk management. They just use crazy lot sizes randomly because they want to make fast money. It doesn't work like that. When you come into trading, you have to be very disciplined. You need to apply risk management. You have to be sensitive to risk, and that's the way to succeed. So we have lot size, we have pip. Now, what's pip? I just explained pip, the difference between prices of commodities or assets or currencies you're trading. And the best way I can explain is if the price of a certain commodity is at 100 and there is a speculation, remember that Forex traders are currency speculators, and you are speculating that the price of that commodity will rise from 100, whether it is euro, whether it is pound, whether it's dollar, from 100 to 120. The difference is 20. From 100 to 120, the difference there is 20. That difference is what we call pip. It means the price of that commodity, of that asset, of that instrument has moved by 20 pips. Now, if you use 5 lots, you will multiply the lot by the pip, and that's how you make money. So people ask, how do you make money? It is lot size multiplied by the number of pips. That determines how much you make. Now, let's take this example. If Mr. A uses 1 lot to buy a certain asset, and Mr. B uses 5 lots, even the distance, if the pip gain is the same pip for Mr. A and Mr. B, they will not make the same amount of money simply because of the difference in lot size. And please take note, the problem with a lot of traders today is reckless use of lot sizes. People feel that when they use bigger lots, they will make big amounts of money. That is not correct. Yes, it is true, but you are not being risk sensitive. And that's where a lot of people fail. And one of the reasons why people use aggressive lot size is because of greed. They want to make too much money, and that is trading outside a plan. But when you say, I want to make $20, and you factor in the lot size that should give you the $20 daily target, and it is not in an aggressive pursuit, you're going to succeed. So there are 3 things that you must understand as you go into trading. Equity is the capital you need to use. Now, listen. You can't have an equity of $100 and use, for example, a lot size of one standard lot. In the case of currency trading, it doesn't apply because your equity will also determine the lot size you can use. Brokers, and let me explain now, brokers will not even allow you to use a lot size of one standard lot when you have an equity of 100. That's the capital of 100. Now, who are brokers? Brokers are middlemen. In a more simple way, they are Forex trading providers, people who you actually transact with. They are the middlemen or the middle people between you as a retail trader and the big market space. Now, let me explain the concept of a broker, how broker comes about. Now, brokers are these people that have so much money. Now, it's just like, I like to make it this way. It's just like somebody who sells a little kiosk, a little kiosk, right? And then you want to buy something from somebody who sells in wholesale. You don't have money to go to the market to buy. So there's somebody who buys, and then you go to, as a small kiosk owner, you go to buy it from this person that buys from the bigger market. So the person that buys from the bigger market is like the broker, is like the middleman. So you buy, if he buys a carton of something for 1,000 naira from the global market, he will put 1,200 on top. So when you go to buy, you buy 1,002 from him. So he gains from you. Now, you are not able to buy, maybe you're not even able to buy all of the carton, you buy pieces of it. Now, the idea is this: since you do not have the money required to buy an order or to trade from the direct global market space, you need to go through a broker. Now, a broker is that middleman that has that money and buys this order in bulk or in wholesale, and then will retail for you. That's why we are called retail traders. Okay? Now, another important thing is this: you need to sign up with a broker that is regulated. I learned about somebody who made $400,000 from a certain broker. I don't want to mention the name, and they ran away with his money. They didn't pay him $400,000 because they were not licensed, they were not regulated. Now, another thing is, apart from trading, a lot of people make mistakes. It's not just every broker that comes up advertising for people to trade with them that you jump at. A lot of people have asked these questions. Please, when you are signed up with a broker, do a fast check if they are regulated. There are some regulatory bodies that you need to check. For example, check if they are regulated with Financial Market Authority. That is if the broker is from Europe. If it is in Nigeria, check if they are regulated and licensed by SEC, that is Security Exchange Commission. And even at that, if they have alliance or they are in partnership with other countries, check the financial regulatory body of that country where they are partnering with, if they are also licensed, so that they don't frustrate you or they don't go away with your money. These are the common things that happen. So we need to understand this. All right. So what have I said so far? Like I said, I don't want to go through what we have on the internet. All these informations are there, but my focus really is, if you're going to become a successful trader, please take these very points. You need to have proper training. You need to decide how much you want to make via a target-based trading program that you've assigned or you design for yourself. And then don't be greedy. When you meet that target, stay away. Why are people failing? They have no knowledge about trading. They just jump into it, and then they have no knowledge about risk management. They just use crazy lot size, and then that's it. No patience. They've not learned they've not gone through the process. They're not patient with themselves. They're not patient with the market itself. Now, there's a technical part of this market that is very important. And let me say this example. We have market indices, things that helps you to determine if it is okay for you to buy now or to sell. There are people who don't care about those things, not because those things are not important, but because of greed. They just want to make money. And when they go into this, when they go into that kind of market, they are bound to experience failures. And that will become a general talk that Forex is not lucrative, it's not profitable, and all sorts. All right. I would have loved to, but I think my system is having a problem. I don't know what's going on.
Let me ask a question, sir. Let me ask a question. A vast majority of people who are here are not Forex traders. A vast majority of people, I may not be interested in Forex trading. Of course, with the enlightenment you're giving to us now, most of them was, okay, why don't I go learn this thing and so on and so forth. A vast majority of people have given their monies to investment people who claim they are trading on Forex. First question I want to ask, these people, did they really trade with the money in the Forex market? Yes or no?
For some, I would say yes. Let me explain it this way, sir. I don't want to mention names of some organizations, but I think one of the reasons why a lot of people are scammed, in quotes, via Forex is because not on the side of the individual investing, but from the company now. One, their return on investment is outrageous. It looks too juicy, and it attracts the attention of the public who are looking for a fast way to earn, and sometimes these people who collect this money don't really trade. They run a pyramid system, getting from Peter to PayPal, and with the hope that new investors will come and they will keep recycling. This is one of the things that happens. And by the time people no longer invest and the money is not forthcoming, they tend to run away or they tend to crash or whatever. Now, but the point is, any organization that is trading and sets a realistic, achievable return on investment, and they are actually trading with risk management inclusion, are bound to succeed. So most of the time,
let me ask a follow-up question. You're saying that most companies put unrealistic percentages, like 20% is an unrealistic percentage. Is that what you're saying?
Yes, it is. And let me explain why it is so.
Because the market is not always good, right?
Yes, let me explain why it is so. As an individual, if you trade, it's possible to do the 20% by yourself. All right. But when it has to do with public funds and you're putting 20%. Now, for some of us who have done investment with some commercial banks, you will discover that sometimes bank offers you 12% annually. Sometimes, I'm speaking from experience. Now, if it takes a whole financial institution to offer you 12% of your investment for a year, how much more a company sometimes whose funds are not insured, and then they're offering you 20% every month. I want you to see the difference. So it's a matter of I think it's greed also from the company. It's not as if it's not possible, but it is unrealistic. Possibility in the sense that it's not going to always happen like that. There are times you can make the 20%, but there are times also the market can be very critical. There are times brokers do what we call several upgrades. It happens, they are trying to upgrade their system, and during that period, a lot of things go wrong, or sometimes they will ask you not to trade for maybe for some time, and you need to meet targets. And this is, you're pulling funds from a lot of people. Not because you can't meet the target, but there are no risk inclusion. What if the market is bad this period and all of that? So during this period, you are not able to cover up for the return on investment you're supposed to pay to these people. So you have to take money from new investors to settle the old ones. And when this keeps happening, a time will come that you will not be able to, to cover the gaps. And that's when things begin to go wrong. And that's why it's not a very sustainable system. But when you see a company who are truly trading and they are offering you maybe 5% a month, in some cases 7% a month, definitely you're going to succeed. That's why my biggest emphasis as a trader will be that you need to learn on your own, and so that if you're able to make 1% of whatever you invest every day, think about that. If you make 1% of whatever you invest every day, and you do that for 30 days, it means you've made 30%. Okay? So you invest like 100,000 and you are making 1,000 naira every day from the 1,000, assuming as low as that. in 30 days, you will make 30,000, which is still far better than expecting 20% from a company that will last for like 2-3 years and then they will go with your money. So this is the problem we have with investment, not because it will not succeed, but the percentage is highly unrealistic.
So you're saying that what is the realistic percentage for any investment firm that is doing a large number of people? What is the realistic percentage?
My recommendation would be 5%, and maybe at most 10%. Not
At
because,
most
like I said, yes, at most 10%. Not because it's not possible for the company to do that, but why you will need to give a reduced percentage so that you will last in the business. Because there could be time where you have market failures. Even the best traders in the world, they lose money. Best firms lose money and all of that. So you don't have to excite the public by making your return on investment so attractive just to lure people to come in, and then you make their life miserable at the end of the day. So this is one of the things that we see in Nigeria. And we Nigerians, we love juicy opportunities. In fact, we love unrealistic opportunities. Even when we know that this thing is not possible. A firm will say, we'll give you 50%. How are they going to generate the money? From Forex? And what's their plan? Sometimes we don't ask questions. What is your fallback plan? What's your risk management plan? We, as investors, we need to ask this kind of question. What's your risk management plan? If the company is sincere, they should tell you, this is what we do. This is how we intend to generate money. This is what happens. And with that kind of transparency, I think it's good to do investment with those kind of companies, not the ones that will say 20% and they have no backup plan. And this is what happens with, I don't want to mention them, a lot of companies that came up last year, almost all of them went down just because of that issue. Sometimes they are trading, some are doing pyramid, but this is what the problem we have with people. So emphasis is, if you want to succeed and you don't have time to trade by yourself, go for a company that offers low return on investment. The advantage is that they'll be able to pay you, and if anything go wrong, they'll be able to sustain your capital invested. That's just the process. But I don't think we like that in this country. The best option, however, is you do it by yourself. Yeah.
Okay, let me get 2 or 3 persons who might be interested in asking questions that I've not covered today. But we really want to appreciate Michael. Michael, you will take us a step further tomorrow into, I know you just touched on a few technical terms, but you take us a step further tomorrow. A lot of us here have put our monies into Forex market. People claim they're doing Forex. Meanwhile, that was not true. They did not really trade in the market. From what you've heard today, the Forex market is a legitimate space. We have institutional traders who put in a lot of money in the billions of dollars, in the hundreds of millions of dollars. And we have retail traders, which some of us are, or dumb traders, some of us are in that space. We have learned that today. We've learned that the market will not always be good. So the market will be up sometimes and down. And it's not all the time you trade. Like you said, that sometimes you just choose, okay, I'm not trading today. He also said something very important about target-based trading. It's okay. I make $10 today. That is enough for me. Even if the market is still good, I refuse to go back to the market. I just say $10 is good enough, and I'm out of the market until the following day. If I enter the market tomorrow and the market is not very good, I don't trade. I wait till the third day. So out of 30 days, maybe 12 or 13 days will be good, and the remaining days will not be good. So you factor in those money. So if a company is coming to do a crowd of people, it cannot be trading and winning all the time. It's not as if 30% or 50% is not possible, but not all. There are a lot of forces that can affect the trading, upgrade or maintenance of the system, factors, news can affect the market prices and all of that. Therefore, you cannot be trading. You don't want to work on. So it's better for you to trade or invest in businesses that have slightly low. It may look as if you're not making money, slightly low, from 5% to 7%, max 10%. 10% is even too high. 5% to 7%. That way, you're sure that they will pay you the money. If you go to the eCooperative platform and you read through, you notice that the investment part, the percentages are quite low. When we flag off, they're quite low. You see 4.5%, you see 5.5%. The highest, I think, in that when I read through, is about 7.5%. And now I'm understanding why that has been placed there. Because realistically, it's better to go for companies that will lower down the percentage than raise it high. So that is a very strong thing I've learned today. Let me just take 1 or 2 questions as we wrap it up today. If you're just joining us, we are ecooperative.africa. We are a cooperative. We are Osusu online. We are Ajo online. One of our core values is education. And one of the things that we are excited about, Michael Essien, is that for those of you who want to trade, who want to invest with eCooperative, when the investment comes out, the details will be spelled out, the contracts will be spelled out for us to invest. Again, the percentage is below, but it's fair and fine. But for those of us who feel, okay, I don't want to invest, I have the mind and the brain to learn, we're going to be having Michael Essien also teach us how to trade. It will take us some time, but we'll learn how to trade. And it's not going to be for free. For members, usually it will cost a lot of money to learn how to trade and play in that market. But of course, because we are members of the cooperative, the ecooperative.africa has entered an agreement with Michael. He will slash it to a reasonable amount. We cannot take that amount for now. Maybe when the investment and the time comes, it could be in a few days, it can be in a week, it can be in 2 weeks, it can be in a month. We'll wait for the eCooperative platform to let us know. But then we'll have a trainer who will show us how to enter the market ourselves, how to play the market ourselves. And if we are interested in doing investment with the eCooperative, then we can do that. Let's take 1 or 2 questions from people today. If you have any questions, don't put the chat. Open your mic and ask a question now. This is time to ask questions. Someone is asking, what's the difference between Forex trading and cryptocurrency or Bitcoin?
Okay. All right. Let me answer this question. Forex trading is just what I've talked about, the exchange, or let me rather put it this way, the speculation of prices between different currencies. What I mean is, if you have hope that euro will rise in the next 2 hours, more than dollar, so you have to buy more euro and then you sell back later. Okay, that I will explain the concept of buying and selling tomorrow by God's grace. That is what we are talking about. You are speculating the difference between these prices. Okay, now cryptocurrency.
Right now, some people are buying dollars and keeping. They are buying dollars because they are taking their naira and to buy, because they believe that the dollar is going to rise to 1,000 naira to $1. And the price, as at a month ago, it was 450. As at today, as at yesterday, or as at 2 days ago, it was 550. As of today, it's 557. Some people are buying and buying and buying dollars and keeping it, hoping that by December it will rise to $1,000, where they can now sell that dollars they have and get higher naira. Is that what? That's what?
Yeah, that's right. Yeah, that's foreign. That's what foreign exchange is. Just that. Now, why are we doing all of that? I think that's what I'm advising people to do that now. If you have a domiciliary account, you don't have one, you have to open one now. Push all your naira as much as you can into dollar. If you're trading, shift your money in dollars. It will help you maybe in the next 3-4 months, who knows? But technically, and the fundamental speculation says that naira will hit 2,000 naira. I mean, a dollar will hit 2,000 naira per dollar. We're expecting that to happen anytime soon. But then that's Forex trading. That's Forex. Okay, that's what it is. Exchange of currencies with the hope that you're going to have a higher currency, a higher value for that currency tomorrow, and then you sell it off. That's what Dr. George just explained now. Now, cryptocurrency is just the same thing. All right. Crypto is that encrypted digital assets. All right. And then it's still a currency, because it permits exchange. And then Bitcoin is an example of cryptocurrency. Now, let me say something very strongly here. You see, currency trading, crypto trading are all under CFD. What is CFD? Contract for difference. This contract for difference is provided by the broker or by the brokerage firm that gives you the privilege to trade on their platform. To make you understand what I mean by contract for difference is that as a trader, your job is to make price speculation. That's the same thing with the Bitcoin. Like I said, nobody really has Bitcoin. Nobody can say, look at one Bitcoin here. There is no way you're going to find that. It's not printable. It's not something you can touch. And so the only way you gain is to speculate the difference in price. And then you put your money in agreement with where your price, where your speculation is. So if you feel, or if from analysis or whatever, and you say Bitcoin is going to go beyond this point to maybe $60,000, and so you are buying Bitcoin. So you buy Bitcoin. You are buying Bitcoin because there is a technical speculation that it's going to go beyond where it is to maybe $60,000. All of this is just price speculation. So they are all contract for difference, CFDs. So both Forex trading and crypto trading are one and the same thing. The only difference is the asset, the instrument for which this transaction happens. With Forex trading, it is currencies. That is global currencies like the euro, the pounds, but with crypto is digital digital assets like Bitcoin, Ethereum, Litecoin, and the rest of other coins. So that's what it is. But all of them falls under one platform, which is CFDs.
Okay, amazing. So I don't know if anybody has any questions. Let's take some questions today. We'll continue this conversation tomorrow because I want people to ask questions about Forex. One of the things I want you to know, friends, is that it's very important we tackle these issues. A lot of people fall prey to scams and schemes because of greed. And even after we have taught this, some people will still go there and see one particular platform promising outrageous amount, and they will still carry their hard-earned money and throw it there without asking questions. If you are here and you've had this level of information and you still go out there to drop your money with somebody without asking the right questions, without saying, why is the percentage too high? Knowing that the market will not always be good. What is the guarantee that if I give, you're going to say you're giving me 30%? What's the guarantee you can give me 30% continually? You know, it is smarter and better to look up for companies, organizations, or investment houses that promise a lower percentage, because then those guys are being realistic. Yes, it is true they can make 20%, 30%, but there are times when they'll look for 10% to make in the market, they won't find it. That is the reality. So in order for them to be safe, they rather give you a lower percentage, promise you, enter a contract with you for a lower percentage, and then trade the market and be consistently doing that, than promise you an outrageous percentage and not be able to fulfill the promise. That is what this is all about. Same thing with cryptocurrency businesses. All right, same thing. It's almost the same thing. So tomorrow we'll continue. Michael Essien will continue to teach us how to buy, how to sell, and they just have a basic understanding. Of course, for those of you who might be interested in understanding it deeper and for him to break it down, like he said something striking, that you don't even have to sell currencies. You don't even have to sell currencies. You can sell metals, you can sell corn, you can sell wheat, you can sell Facebook, you can sell Amazon. Most of you don't know that. You can sell commodities. You can sell precious metals. You can sell silver. You can sell crude oil without necessarily being right. Am I right, sir?
Yes.
You can sell crude oil without necessarily being in the crude oil markets on the platform. You can sell stocks. You can sell anything on the platform. It's a very interesting space. It's a space that the poor don't want to learn. All the poor want to do is take their money and give somebody that money and expect that it will double or triple overnight without going for the. I don't have time to learn, or let me just give somebody money to trade for me. That is a wrong approach. So 2 things we're going to be helping you do in eCooperative when you join as a member is that, first of all, you will have the opportunity to learn from the top experts how to trade yourself in the market at a discounted amount. Because for you to learn Forex trading, you may end up paying as much as 300,000, 150,000 now. But because you're a member of eCooperative, when that time comes, I'm very certain the amount you will hear in order to learn will be so discounted and fantastic. Number 2, ecooperative.africa also opens up an investment platform that tells you that, you know what, guys, if you're going to invest in that space, the percentages are low. So the cooperative will go to the market and trade at a lower percentage. When that time comes up, the information will pass across. And on how do you become a member of the cooperative, all you have to do is start with 2,000 Naira. And the 2,000 Naira or $4 is not paid to eCooperative. eCooperative says that take that 2,000 Naira, look out for somebody who is already a member of the cooperative, who has a link or a referral link, and pay the 2,000 to that person. For that payment, the cooperative gives you materials on your dashboard, information materials on training that can help you improve your life, your finances, and career. For every upgrade you make, there's information given to you. Plus, you have access to sell anything you want to sell on the e-commerce platform, which, by the way, will be launched on the 20th of this month. Anything you want to sell. Plus, you can also invest in a cooperative. You can also invest in a cooperative and get some percentages. Plus, you can learn how to invest at a discounted amount of money. Plus, you can also save in cryptocurrency by downloading BitNop and many other openings on the platform. It's an exciting platform. It is not a Ponzi scheme. We don't make promises to you. There's also the MLM part where you can make as much as 4 million naira when you put in your money, as much as 4 million naira if you know how to build a team. But there are no promises. There are no promises for that. You have to build a team. So you can say to yourself, okay, I don't want to do the MLM part. Let me do the investment. And say, okay, I don't want to do the investment part. Let me do the e-commerce. Well, I don't want to do investment. I don't want to do e-commerce. Let me do the training. Let me learn how to trade myself. The options are there. You are as free as the options available to you. So that is what we do. So if you're just coming into this group, we're not going to show you the compensation plan today and maybe tomorrow. We'll just let you know, for you to be a part of this massive platform and that's education driven, you need to have 2,000. And look out for the person who invited you and tell him to send you your referral link and then register and then give that 2,000 to him or her or to whoever you see on the platform. If you don't have anybody who has registered, who has signed you up, go to the cooperative, www.ecooperative.africa, click on it, click on register and sign up. Get started first, upgrade to level 1, access the opportunities and on. You can have a chat with us. You'll get to learn more. All right, that is fantastic. Thank you guys for being a part of this class. I'm sure you got some value. Tomorrow will be more exciting. I'm sure that you have questions. I don't know why nobody has asked questions. After we have left, we now start throwing questions. Someone is saying, can Forex be manipulated by those big institutions who you claim move the prices of currencies just for their own gain? I already have the answers at the back of my head. And I think you answered it, Michael. I think yes is the answer, but let's get to hear you just answer that question.
Okay, Mr. Victor, thank you for your question. You're asking, can Forex be manipulated by those big institutions you claim? Well, I didn't claim, but it's true. Yes, they can manipulate price. And let me explain why they do so. Statistically, it is told to us that the entire wealth of the world is in the hands of 5% of the population of the world, all right? So you will ask yourself, why is Elon Musk still doing more business? Why is Amazon wanting to go to space? And a lot of all these billionaires already. But they want to make more money, all right? They want to make money. Yes, I agree they are giving out money too, but they want to make more money. And they are also players. And that's why you see Facebook, you can trade Facebook, you can trade Amazon. They are there. And the New York stock market, the financial market generally. So they manipulate price because they want to take money from retail traders too. So it can be manipulated. But the good thing is this. From research, we've been able to know now that we know when they come into the market, we know when they are also leaving the market. Tomorrow, I will talk extensively on the technical part of it. How you know that the market is going to go high or will go low. How you get to also know when the institutions are in the market at the time. There are certain indices the market shows you. There are certain signs the market there are trademarks that the market leaves. So you know that, oh, these persons are here now, or they were here at this time, and all of that. That aspect of knowledge is called SMC, smart money concept. It's a whole body of knowledge under trading, and it helps you a lot. It helps you to know when to stay out of the market and when to be part of the market. So it can be, of course, price has to be manipulated. They manipulate price because they want to make money. They want to take your money. So tomorrow I'm going to do a simple explanation so that you get to see why it is so and how you can avoid that in the future. Thank you.
Thank you so much, sir, for the time. Thank you so much for being part of this class. And I'm sure you got some value, got some lessons. Prepare your questions tomorrow. We'll continue this conversation. This is www.ecooperative.africa. And go to the person who invited you, request for him to give you a referral link and get signed up. See you tomorrow, and God bless.
Thank you, everybody.